taking a look at the market, it has done something incredible that it has not done since 2010, around the housing crash, the housing bubble, which was 2008, 2009. I'm going to go over that. It looks like for the time being, the only thing that will bring this market down is a black swan event. And a black swan event is something that happens that is not even expected. So for example, the housing crash, the housing bubble, that was a black swan event because it was not expected. Unless if you were part of the Big Short people from the movie and all that stuff, like Michael Burry, where they looked at the data and saw a housing bubble was going to come at one point. But to the whole entire market in general, for everybody, normal investors and hedge funds and all that stuff, technically it was not expected. So it's a black swan event. Then the pandemic was also a black swan event, was unexpected. Yes, if you were aware of the news in, like, for example, November and December, just before the pandemic came into the market effect, you could have anticipated a drop. But again, for the overall market and the overall investors, it was unknown that this event was going to happen, so therefore a black swan event. So the only thing that could be dropping this market, again, like I've stated, was a black swan event, is going to be a black swan event, because I'm going to be showing reasons as to why the run-up potentially is going to just continue for the most part. Yes, there'll be a pullback, and I'll explain why potentially, but it's just going to be small pullbacks. For the massive pullback, it would have to be a black swan event, and I'll explain why for the following reasons as well. So if you look at the overall channel right here, this channel dates back since 2008, 2009, the housing bubble crash right here. These are upward trend support levels. These two bottom blue lines, upward trend support level. Arguably, this bottom one only has 2 touch points. So this was 2009, the bottom of it. And then the second one was the pandemic right here. So if it had 3 touch points, it would be guaranteed upward trend support level. So it has to be tested again one time in the future. But either way, this second one right here came down, bounced on 2008, I believe in 2016 right about here, and then 2019 multiple times, and then again in 2020. So it's guaranteed upward trend support level as well, multiple times bounced off it. But then here's the most significant part. In 2010, right about here, this upward trend resistance line went up to it, got knocked down, went up to it again to test it, got knocked down twice in 2011, and then 2013 to 2015, tried to pass it multiple times. Every time went up, just got knocked down, went up, got knocked down, went up, got knocked down for 2 years, give or take, and could not pass it until now. Went up and passed it. And you can see right here, went up multiple times, arguably a little bit of a smudge pass right there, but it's not even noticeable for the most part. But right now, this is way more than it was before. Can it be a false breakout? It can. It could get pulled back down, and I'll explain why as well. But that passing this level is so significant that even the indications I'm going to show as to why it could get pulled back down, not regarding the black swan event, because black swan event, again, if I knew, it probably would be obvious to everybody else, potentially, maybe, arguably so. So I'm not aware what kind of black swan event could happen, but there are indications that it could be pulled down, and I'll explain those. But just keep in mind, passing this important level could mean that it could keep going up, and I'm going to explain the fundamentals as to why it's just going to keep going up. It's the market that just keeps giving, it looks like, at this point, and here are the reasons why. First of all, if you look at the interest rates, it's at 0 to 25 basis points, which is essentially 0% interest rate, right? And the reason why that's significant, and if you saw my last video in terms of the Fed meetings and all stuff, or second or third last video, they're not looking to increase interest rates until the year, technically 2024, but I think it's going to be 2023 based off the votes as well. So there were some votes for 2023 as well. And then knowing the overall market and everything, it's probably going to be by the end of 2022. So as technically the earliest, hypothetically. So you're looking at somewhere between 2022, 2023 interest rates. And that's quite some time to come by, like until they increase interest rates. And the reason why that's important is when there's essentially free money, because there's 0% interest rates to borrow, essentially give or take, then companies tend to borrow more money because it provides more capital to invest into research and development. And then when you do that, you hopefully grow your earnings. And when you grow your earnings, you lower your PE ratio. Then they become more attractive investments. And when that happens, people tend to buy the stocks even more. More specifically, potentially hedge funds or something that they think the stocks are undervalued, driving the market up even higher. So that is why that's important. And for the time being, to me, because they're not going to be increasing interest rates until technically at least 2023, I think it's probably going to be personally until end of 2022 at least. But either way, 2023, that gives ample time for the market to keep running up, especially since it passed such an important level. Now, quick disclaimer before I continue with the other fundamentals and why it will go up and why it will come down based off pullbacks indications. Like always, I'm not a financial advisor. I'm not a professional. Everything I do share with you is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. Now, if we go back to some data points, if we look at the unemployment numbers are still dropping. So yes, they're not pre-pandemic numbers, but you could still see hypothetically an improvement in the overall economy, hypothetically again, because I don't know what event's going to be a black swan event. So some of these data points, for example, they might be represented in a certain way, and these are true data points, but sometimes they could be misleading, where it's just like, for example, for the housing bubble, right? If you watched all the business channel news before the housing bubble happened, or not the housing bubble happened, but the burst of the bubble happened, you saw multiple times on business channels stating that the housing market is healthy and it's growing bigger than ever and all that stuff. If you just watch the business news, you would have no idea that there was a housing bubble, or not housing bubble, but you had no idea that the housing bubble would burst anytime soon, hypothetically. So take it as you will, but these are the data points overall. So then United States bankruptcy numbers are actually dropping. So you can see from here, 2012 coming down the whole entire time, lowering. So technically, there's no real issues to be concerned about in terms of bankruptcy numbers, because businesses are not really declaring bankruptcies as much as they were before. And this is the biggest news for me. United States corporate profits, you saw me cover this before, where they were pretty much stable pre-pandemic. Then they obviously dropped during the pandemic time. Then they would stabilize back to pre-pandemic levels. But now this is insane. This has spiked up to way past pre-pandemic numbers. And this is significant to me. So corporate profits are jumping massive amounts, and therefore, to me, I'm assuming their PE ratios are getting even lower because their profits are increasing. So therefore, more of the reason why it'll go up to the upside. And if you look at the 10-year Treasury yield, you can see right here, people were panicking because inflation. So when the yield goes up dramatically, it indicates that inflation is rising up faster than expected. And then when it's coming down, hypothetically, would be normal. This is technically coming down right now, so it's not really a concern or alarm. And you could take it as you will, because the problem is, I think there's an issue with calculating inflation with this. I don't think this is a true representation, in my opinion, but the Fed state that inflation is just temporary, transitionary, and all that stuff. Take it as you will, but either way, if you look at all these data points and all these signs, indicates that everything's fine. Everything's going to be continuing to the upside, and upward trend resistance line has been broken, so might as well just get in and you're fine completely. But that's not the whole picture. There's other signs indicating the reason for a pullback. So those were the reasons why it would be going up. One reason why it would be coming down dramatically would be a black swan event, like I stated. But keep in mind, nobody hypothetically knows what that event might be. Could be anything. But the reason why there's a potential pullback in what I'm going to show is, in my opinion, is you see this RSI chart. So this is the 5-year chart, by the way. So this RSI chart indicates if it's overbought or oversold. And right now we are in overbought territory, technically approaching extremely bought territory. Extremely bought is when you're surpassed this higher part level right here, if you could see the top part of the chart, and you're in like these higher up territories. So extremely overbought, extremely overbought. And when you're extremely overbought, you could see pretty good, decent pullback. So here was the pre-pandemic a little bit, and you could have anticipated a massive drop. Here was in 2018 where we had that like decent drop as well. And then like the housing crisis right here was in the heavily bought territory where we're right now. And you could have anticipated a little bit too early, I would say, but in essence, you would know that it'd be coming down. Now, one thing I want to state though is a lot of intelligent investors state this point, and I agree with it. Timing the market, or time in the market, is better than timing the market, and for the following reason. So here was in heavily overbought territory in 2011, and you can see this drop right here. But even if you entered at the peak of 2011, and you miss this drop, the best thing to do is just keep buying, averaging the whole entire time. So whether you're putting $100 a week, just continue that $100 a week, because by 2012, you would have got back to the same level at the peak you bought, plus you would have benefited from the drop, and then you would have started making profits. Because this whole entire time, even though it got stuck by the upward trend resistance line, the market was still moving to the upside no matter what. So even from 2013 to 2015, it was getting stuck by the resistance level. The market was still making new highs the whole entire time. So don't be hypothetically discouraged in black swan event or whatever it might be. But one thing that I would probably do is I wouldn't be dumping a lot of money yet. I would probably expect some kind of pullback at one point or a black swan event at one point, and then you could go heavy. I would just continue my averaging amount, and that's it. I would not do anything excessive. Just keep continuing with your weekly or bi-weekly or monthly contributions, and that's it for the most part. Maybe slow it down a little bit if you wanted to, but depends though, because if you expect this upward trend resistance line that it got broke, that based off all the fundamentals I showed, that the run-up is going to be significant right now because it broke such an important level, then I guess maybe go a little bit heavier than usual. But I'm just providing the information, and then take it as you will based off what you think this information portrays. Now, because we're in overbought, heavily bought territory, we could get a small pullback. Again, black swan event could pull it down. I'm going to show something more significant as well, but just one quick thing. MACD line right here indicates if it's bullish or bearish movement. Right now, for the time being, it's a 50-50 split. Yeah, it crosses over to right now the positive, so you can see this green uptick right now, this green bar, indicating it's in a positive, bullish movement, optimistic overall, potentially like pointing to a potential run-up, somewhat of a start of a run-up. The only thing is though, I would be a little bit cautious, because so this is the 5-year chart. If you go to the all graph right here, so the RSI chart for the all graph, so encompassing the whole entire thing. Again, this is the S&P 500, so this represents 500 largest companies traded on the US stock exchange. So it's a really good representation of the overall market for the most part. But if you look at the RSI chart for the whole entire chart, you could see that we're essentially in extremely overbought territory in terms of the whole entire chart. And more of a reason why I expect a potential pullback at one point. Now, what I mean by one point, I don't mean in the next 3-4 months, which could happen, especially if there's a black swan event that happens, in, let's say, in October. But I would say because it passed the upward trend resistance line right here, I would say there's going to be somewhat of a run up and then a pullback in the near future, maybe in the 6 months, year and a half, whatever it might be, because we're approaching that level at that point. Now, it doesn't have to be a massive drop. It does not have to be a massive drop. You can see in 2018 right here, we had a significant drop, but based off the graph right here, this drop was decent, but it wasn't anywhere close to the pandemic, and the pandemic was just in heavily bought territory, not extremely overbought territory. So take it as you will. And then if you look at the MACD line right here, this is, again, bearish or bullish movement. And for the time being, it is optimistic. It is in the bullish movement, and it's in the positive. But you can see the bar has become a lighter shade of green. It has become smaller, potentially going to be curving back down to come back down to the downside. But you take it with a grain of salt, because we've seen this in the past multiple times where it became light shade of green, a smaller tick, and the drop was just relatively a small drop compared, for example, pre-pandemic or during the pandemic drop, and then it still went up to the upside. So you could have technically just got out for the small drop and then maybe not even called it right, and it would have went back to the same level you exited at, or it would have been past that level and you probably would have re-entered here just trying to time the market, and wouldn't have done a great job depending on the time you've entered. So just keep in mind, this is just information. Take it as you will. Hopefully you find it helpful. Hopefully you like it. By the way, it's at 4,535 points. But yeah, if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. If you like the video, consider dropping a like. It does help with the channel, so thank you so much for that. And if you like videos like this or other financial videos or other stock videos in general, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching, and I'll see you in the next video. Peace.